Yes, we're live, baby.
We're live, baby. Why do people always say we're live, baby? We're live. But that's actually I have a bone to pick with people who go live and go like, we're live. I get it. Like, and I've done it. I'm guilty as well. But let's change. We're live to welcome, everyone. We are live at the LUNICORN on Instagram and LUNICORN on YouTube. Rufus, what are we chatting about today?
Today, we're going to talk about venture capital and venture capital Europe versus US.
VC in the Europe versus the US.
Yes.
Why do we have to compare ourselves? Why do we always have to compare ourselves? I understand that we always like to compare ourselves to the US because the US is the home of it all, the holy grail. Yeah. But it's uncomparable in my opinion. But Rufus, you're going to tell me why it is comparable and why we should talk about it, right?
Yeah. First of all, I'm going to ask you a question, beginner question, because I have no background from it, as maybe some of our audience knows as well. But
hey, and if you have some questions, let us know in the comments on Instagram or on YouTube. We'd be happy to answer them as we go through here. And also, it's nice to look at the comments at the end of this because then we can say, hey, like that was a really great one, and we can maybe even write to you personally. So hit us up DM as well.
Absolutely. What we're going to talk about today is a venture capital article from Sifted, where they compare the two differences.
Sifted, the European kind of TechCrunch, the new tech channel that's focused on European technology.
And they talk about how much Europe has grown with the capital that funded into new startups.
Yeah.
But first of all, I want to ask, why is venture capital so big in the US?
Why is venture capital so big in the US? Well, firstly, it was invented in the US.
Okay.
Do you know the origins of venture capital?
No,
do you know the origins? Let us know in the comments right now if you know the origins of venture capital. I'm curious. All right, so you guys ready for a little Matt Smith history lesson?
Yes.
Let's do this. All right, venture capital really sort of first saw its early days, and it's hard to exactly pinpoint or put a definition exactly on when it started. But in 1946, a guy called Georges Doriot, I think his name was, set up a fund called ARDC, which was actually trying to invest in soldiers who came back from the war and wanted to do like private equity rounds to help them build businesses, basically. Because, there was a massive boom after the war. You had all these soldiers coming back who'd been in the war. Their jobs had been as soldiers, coming back with discipline, but obviously not huge amounts of jobs because obviously the jobs previously had been to support the war, to support General Motors and creating tanks and other things like that. So the earliest VCs, and interestingly, so that was in 1946, right? Interestingly, all the modern day VCs that have been around since the 60s or 70s come somewhat from those founding teams. So for example, Greylock Partners, which is one of the oldest, most institutional investors, actually was founded by one of the early partners in our ARDC. So it all actually stems from Georges Doriot. We have a lot to thank him for. Structures have changed and evolved over the years, but it's just quite interesting that actually VC has actually its connections with the war, actually.
I had no idea.
Yeah, and then obviously in the US, why it continued to grow was if you think about where, like name some of the most successful technology companies that are 50 years old or 40 years old or something like that, right? So we got like IBM, right? American. We've got Apple, we've got Microsoft, and the list goes on. Oracle, Cisco, right? They're all American, right? They all came from VC funding in the 70s, 80s, 90s. So VC has been an American invention, actually. People forget about that. Like, why is VC so great in the US? Well, it's an American invention. I
had no idea, actually. Okay, so was it invented by? So is it like one person? Is it?
Well, I mean, again, that's hard to say, like, because it's finance and it's a derivative of finance and it's different structures. But in general, like it was the guy called Georges Doriot, I believe was the initial kind of like, he's called the grandfather or the inventor of venture capitalism. In its sort of most modern form, it was recognized as that then.
Okay, so it was invented in US.
In the US.
The term comes from US.
Correct.
And that's why
we're done here now, right? Good. Yeah. You got the answer you wanted, right?
They're ahead of the game.
They're ahead of the game. Yeah, they started it. The US was first, foremost, created it, defined the model, and that is the VC that we know today.
And you have also spoken before about the waves of like inventors, like the builders of companies. What is that?
So again, another reason that we like to compare ourselves to the US in Europe, in anything from funding to how investors invest and how much money gets invested per round. If you might know this, but if you don't know this, that funding rounds tend to be larger in the US, right? So investment rounds in the US are larger. So for example, a seed round in the US, which is your kind of first round of funding post starting the business and things like that, can be anything from the US. Say for argument's sake, it's very sector to sector. So again, this is just a generalist comment. It can be anything from 100,000 to 5 million or something like that. Well, maybe 100,000 to a million. Whereas in Europe, it's usually about 1 to 2 times less, basically, 2 times smaller and things like that. But I can get into that in a second. One of the things that people forget about is the entrepreneurial cycle, right? So if US sort of started this wave of entrepreneurship, started this wave of early technology as we know it, being invented, a lot of the founders, every single 7 to 10 years, it's called the entrepreneurial cycle. So for example, think about this, like Apple 1975, at Microsoft 1976, I forget which one was 75 or 76. Anyway, those companies were created then. Now those founders, Jobs and Bill Gates and the others, right? It takes them so many years to get to a position where they could exit, right? So say those founders exited. Now in their entrepreneurial journey, their early employees become very successful. Their early employees might leave that company, create their own companies. So every 7 to 10 years, the entrepreneurial cycle resets because you have a wave of successful billion-dollar businesses, which create millionaires, which create successful investors, which create inspiration value, both for founders and investors. Because when Jobs goes through there and does great things, and other founders to this day, it's they take the industry with them. So you get people on the periphery, founders become inspired and things like that. Now the interesting thing is, back in the day, because of the rate to which technology changed back in the day was a lot less, right? So it would take 15 years to develop a company and sell it, whereas today it takes 7 or 5 years to do that. We're seeing that even more. Like look at the example of Hopin, right? Hopin was founded in March 2019, and it's a $5.3 billion business, right? Like,
that's insane.
So it's already created many millionaires. Like some of those people could leave the company and sell their shares if they had an option to do that. And long story short, if you are part of that journey from the beginning, you can go and create your own company now. So now the entrepreneurial cycle is shortening.
Is a cycle something you should look for when starting?
I mean, I don't know how. Yeah, I also put it this way. Like, so in Europe, we're in our 3rd entrepreneurial cycle, maybe 4th, maybe. The US is in its like 7th, 8th, 9th, maybe more 10th even already, because every so many years, because they've been going for longer, there've been more entrepreneurs being reinvested, more money reinvested to the system, more people being inspired from that reinvestment, more investors being inspired by the people who are making money in that game. That's the entrepreneurial cycle. Yeah. The US is like twice ahead of us in terms of cycles. So obviously there's a greater subset of entrepreneurs. There's a greater subset of capital investing in those places. So that is naturally why the US is a head start, you could say, in comparing the US versus Europe.
Okay. Is it also the thing there where like Mark Zuckerberg or other big entrepreneurs are like reach their point? Is it like always that they reinvested in the industry again? Is that just history and accidentally that it's been happening?
Not always. I'm not going to say that every founder reinvests all their money into the system, but I think there's also a bit of an obligation with a lot of founders to sort of like, if you were supported by angel investors, then a lot of founders will become angel investors, not only just because they want to invest their own capital, but because they're going to be good angel investors, because they're going to understand entrepreneurs, they're going to understand how the system works, they can add value to these teams.
Because you have something like PayPal Mafia.
The PayPal Mafia is a good example. Yeah. So all these guys and girls who joined PayPal in the early days, right? They went on then to create their own fintech businesses. Swapping the table. So you've seen this with like Peter Thiel was PayPal Mafia, right? All these, and he's like one of the most prominent investors to this day, right? There's so many investors that emerge and entrepreneurs that emerge from different startups, like Airbnb. There's an Airbnb mafia. Like Bumble came from Whitney Wolf Herd, who's Tinder. So there's so many good examples of successful teams who then create more successful teams. It's a multiplier effect. So the US has had more successful teams. It has had more years to create more successful companies. Therefore, it has a greater subset of entrepreneurs and things like that existing.
One fact from the EU is that is 59% only men. So it's pretty divided on like men and women in the industry. But when it comes to US, it's 67%.
Men. What do you mean by that?
in the venture capital teams.
Oh, so as in like the VC teams.
Yes.
Yeah, well, I mean, obviously, yeah.
Is that because of like the old history from and it continues with it? Like, I have to ask. But the funny thing on the flip side as well, in US, they saw that 43% of the teams has people of different
ethnicities.
Ethnicities.
So basically, you're saying that the Europe is more diverse in terms of women and men. It's more balanced, men and women in VC teams.
Yeah.
And the US is more diverse in terms of ethnicity.
Yes.
That's interesting. I mean, obviously, Europe being probably Caucasian, I can imagine obviously there would be less diverse then because Europe is predominantly Caucasian, right? Mm-hmm. Whereas obviously the US is very diverse in terms of ethnicities. However, obviously, maybe the US is doing a worse job of introducing women into the VC boardroom and the partnerships. Now, I remember seeing this when I was a VC in London. The majority of the analysts that I knew were men, right? You know, and that was in 2013, 14, 15. Whereas now you've seen a lot of VCs who have quite like intentionally balance things out and things like that. I think obviously, like anything, there's a lagged effect, right? So we identified the problem 5-10 years ago and said that, hey, there needs to be more equality in the VC setup. So VC start to actively make change for that positively, and they've done a great job for that. We got a question there from Henrik. Why was it that there is bigger funding rounds in the US? Yeah, I'll come to you. Great question, Henrik. I'll tell you in a second, mate. But to finish that, basically, you know, it's interesting to know that the US is not doing as good a job as Europe in gender diversity. However, I mean, maybe it's not that surprising because Europe is consisting of Sweden, Denmark, Finland, these countries that are prominently leading the way globally in terms of different gender splits in all organizations. I mean, I've even hosted a podcast about gender diversity for the she community. A male, has hosted a conversation about gender diversity, and that was intentional, right? Because obviously it was meant to open up the conversation that like we shouldn't alienate men and women for these conversations, or like if girls talk about it, guys can't, or if guys talk about it, you can't alienate one or the other. You have to be inclusive. Henrik, why is a great question from Henrik here on YouTube. Why is it that there is bigger rounds in the US? All right, this is quite simply coming down to the cost requiring to create a company. So to do the same job in Europe versus the US, it's not the same cost. It costs you more in the US than it does in Europe, simply down to the labor costs, right? So this is something when you think about VC funding from a bottom-up perspective, a front end or back end or just a full stack developer in San Francisco Bay Area will cost you on average, like, $150,000 to $350,000, right? In Europe, it doesn't cost you that. It costs you $40,000 to $120,000 for like the top end one. So, the cost for the same respective talent is a lot higher in the US, also because the living costs are higher. So everything's relative. In San Francisco, you might know this, Henrik, that San Francisco, to rent the same flat, like this flat here in Europe for like 2,000 euros a month, in San Francisco would cost $6,000 a month, for example, right? So like everything is more expensive. So salaries somewhat need to match that kind of thing. Also, the competition is so high in the US for talent. So like Google's and Facebook's will pay literally in total compensation $500,000. Like you'll get a $350,000 salary and you'll get $150,000 in bonuses in stock in the company every single year. So companies really need to like be competitive to develop the most sexy products. So it costs a lot more to hire people to do the same thing that it does in Europe. Also, there's more competition in marketing. So you have to spend more on marketing in the US versus Europe, because in Europe, theoretically it should be opposite, but because Europe is so fragmented, but it's just generally comes down to the cost required to create these kind of companies.
Do you think that will change by the time we go where everything gets more digital? People live where they want to live. They live on like a cheap places like Lisbon compared to Norway. It's much.
This is an interesting question about with remote work and travel, right? Which is what everyone's kind of thriving on right now. Remote working and traveling. Will that mean that companies will pay you less, for example? I mean, it's an interesting question because, well, actually, I don't know. On the flip side, think about the cost to a company in terms of employing someone, right? They have to pay all the benefits and things like that, right? But they also have to pay the building costs. That there might be some sweetener for the travel costs and things like that if you're constantly traveling around and all this kind of stuff. And so actually, there shouldn't be any. Should only be a reduction in the cost for a company. So if anything, maybe salaries should increase. Yeah. Because you are now not having to rent office space and provide all these extra additional services, food, benefits, massages, all this kind of stuff. The people are going to do that on their own. So that's an interesting question. I don't know what will happen. Silicon Valley companies are famously good at benefits and perks, right? And the reason for that is, again, Henrik, the cost to create around an individual in a company, they're trying to keep you, they're trying to attract you to stay with Google, to Facebook. Why would you leave? Well, don't go and create your own startup, work for Facebook, because we'll pay you $500,000 in total comp a year. So the startups who are trying to poach those people, they have to give equity, they have to try and match some salaries and things like that. I had a conversation recently with a friend of mine who has a company in the US, and the salary expectation for an individual that's going to join their team as a co-founding member is outrageous compared to any other country I've ever seen it. Like it's in the hundreds of thousands, right? Which is something like, I didn't take a salary for a period of time when I first had my first company.
Wow. Yeah, that's big. How do you...
Any other comments? Let us know.
Yeah.
IGTV, I'm looking at you, baby. Hit us some questions. Hit us some comments. Thanks for joining us. Juliana, I can see you there. Chris, Jay, if you have a comment, please do write it now and we'll answer it to you. Henrik, follow up. Anyone else? What else, mate?
I also want to ask you about, because yes, the US is more like popular. They get bigger foundings.
Yeah.
Is that because of the market size as well in that place? Like US has bigger marketplace than Europe.
So you got to look at it this way. This is something that I also like. Well, I get a bit kind of caught up in comparisons between the US and Europe, right? So yes, the US is bigger. It's 350 million people or something like that, right? It's a singular economy, which is interesting, versus Europe, which is about 400 million people, but it's not a singular economy. Eurozone is a singular market. It's not. Yeah. It's fragmented markets in multiple languages of 30 countries split, not just Europe as a nation, but all the countries, right? So it gets quite complex when you start to think about things. However, one thing I will add is if you look at mobile penetration in the US versus Europe as a whole, Europe has higher smartphone penetration. For example, the Nordics. So if you want to launch a product in the Nordics, now the Nordics, like Norway's 5 million people, Sweden's 10 million people, Denmark's about 5.5 million people, Finland's about 6 million, something like that, right? Altogether about 26, 27 million people in the Nordics, including Iceland, right? Which is 350,000 people, I forget. Yeah, I think it's 350,000 people. Anyway, we never leave them out. I love Reykjavik. I've been there many times. It's an amazing startup city. Small, but it has everything it needs. Anyway, so you have 26, 27 million people. Those 26, 27 million people, say there are like 18, 20 million people of that who are like smartphone first, have disposable income, are tech savvy, educated, speak English and things like that, right? That's 10% of the US market, right? But in reality, of the 350 million people in the US or so, only 20% of them are a smartphone first, native language English. So if you have a native language English product that you need people with disposable income. So like, actually, the market isn't 10 times bigger in the US. It's 2 times bigger in terms of your actual addressable market, which is something that people forget about. Thinking about your TAM, which is a startup buzzword, your total addressable market. So you can quote that like, we're targeting the US. Yeah, USA, here we go, right? Which is a great thing to do because it's a massive market. But looking at it from a European perspective, you're targeting maybe 50 million people in the US, whereas you're targeting 25 million people in Europe, even though you would think that the populations are greatly different. It's all about the actual individual user if it's a B2C product and you're dealing with mobile first and things like that. Henrik, another question. Can we ask outside the topic? Yeah, why not? Go for it, man. Rufus, ask him one more question, then we'll get on to Henrik's next one.
Yeah, the next one is, do you think
if you have talking... one, I'm gonna force you. Rufus, come on. Question, dance monkey. Give us a question. Give the people a question. Hello, everyone. Thanks for joining us, by the way. We're not going just yet. Rufus got one more question, then Henrik. And if you have any more questions on IGTV, let us know. Rufus, what?
Yes.
Come on, Rufus. Put some pressure on Rufus. Come on, Rufus.
You said that you don't want to compare US to Europe.
Well, I'm just like,
do you think we will actually come to a point where it's not Europe versus US? Because it's not only in
it's an interesting question, actually.
We have that. It's like, it's so many terms. Like, yeah, we compare us to US.
No, I mean, I think, it's always good to have something to chase. It's always good to have something to look forward to and to model yourself on, right? And Europe has been chasing the US, has been modeling itself in the US. The US is now looking to invest in Europe. Europe is now looking to invest in the US, right? So I think definitely over time, we're going to have more of a connection between the two regions, right? And more, there's already happening, like US VCs have, I think it's Sequoia or one of the big US VCs has got an office in London now. Vice versa, some European VCs have started offices in New York and other places. The bottom line really comes down to, cities emerge always as leaders in industries. So London is obviously going to be a financial capital because it's been a financial capital for hundreds of years, right? Banking was invented by Barings and all the brothers and the banks in London, right? Same in New York, right? It's got a long legacy history in banking. So New York and London will be intrinsically linked for probably ever until things start to fragment more in the next 40 years. I don't know, until decentralized finance really kicks into place. And that, but interesting that you're having nations like Latvia, Lithuania, Estonia create these e-residencies, making it easy for people to create businesses and things like that. It's just fascinating to see things grow and emerge. Capital will continue to flow as borders become borderless. As people start to work remotely, we'll see more companies being created by people who aren't working in specific countries. And I think we're going to get to a position where companies, because also like VCs want to invest in a region they know, because they have also, it's like if you raise money from a VC in New York but you're based in London, and you want contacts of theirs, now their contacts and network are going to be in New York, not London. So it is smart to raise money locally because you have access to that local market, access to that network and things like that. Henrik, question: how would you get into the industry with very few big companies? Hold on, what's that? How would you get into an industry with very few and big companies? What do you mean by that?
So few companies, but big ones, I guess it is.
Oh, so how would you get into an industry with very few? So like a monopoly market. Yeah. So yeah, okay. That's an interesting question, Henrik. So Henrik's asked us this question, everyone. Like, how would you get into a monopolistic market, right?
First thing I think of is when you're starting small.
Yeah.
You have one thing that big company doesn't have.
What's that?
You can change very fast.
You're agile.
You're
exactly.
super agile.
Yeah. That's a great point, Rufus, actually. You can move quickly. Think about, what is your advantage, which is their disadvantage? The fact that you are nimble, you're able, you can pivot, you can change. Like big companies that are legacy and old, banking is a great example of that with PSD2 and GDPR. They can't right the ship. The ship's been going straight in the same direction for so long, you can't change direction very easily. Whereas, that is what you've just given us, Henrik, is the definition of an innovative startup going into banking and trying to decentralize or trying to do something unique with finance and peer-to-peer lending or whatever it might be, right? So that's a good question, Henrik. I mean, the way I would do that is obviously first and foremost, identify a problem that you can solve quicker to them than they can, and they either buy that solution off you or they buy you and integrate that into their organization. And that's what the big banks and big legacy nation companies do. They acquire innovation. There's a big trade-off in that industry with big companies. It's build versus buy. So if you think about it this way, like PwC wants to create a new accounting system software for a lot of their companies right now. They can build it or buy it. So if they build it, they're gonna have to pay a bunch of people high salaries with packages, and it's gonna take them, a year to build this thing, right? And ultimately they're working also within a large corporate, not an innovative, adaptable, as Rufus said, agile startup. So they're gonna have a lot of barriers up. They're not gonna have as much clear, transparent. They're not gonna be able to move as quickly as a small team developing on the same kind of idea by themselves without the same thing. So actually, if you were to create as a startup, that kind of solution, they're like, it's going to cost us 2 million in 1 year to build this, or we could buy that company today for 5 million, but we get it today and it saves us a year, which is worth 2 million itself. So we effectively we maybe end up saving money by just buying a company to this day, and that's what a lot of the big monopoly companies do when they find solutions. I hope that answers your question, Henrik.
Okay. If anyone has else questions, I think that's a wrap up.
That's a wrap for this live. So we're going to do these live streams every single Wednesday and Sundays too. And we're going to start to develop a live show out of this because Rufus and I are testing a lot of new things. So thank you, Henrik, for your questions. Thank you everyone who joined this live stream on Instagram as well as YouTube. Yeah. And let us know if you have any comments to improve this. This is the first one we're doing, second one we're doing of this one now, actually. And also throw us some questions and comments. If you want us to talk about a specific topic, remember my background is venture capital, is angel investing, is all kinds of things. Rufus as well, editing. He's really into this industry. He's into entrepreneurship and things like that, as well as a professional skier. So throw him your skiing questions. Why not? That's a wrap, everyone. Thank you so much. Make sure to check our YouTube channel, LUNICORN on YouTube. Give us a subscribe. We have daily videos going out there. My name is Matt C. Smith. This is Rufus Tangen. Together, we are LUNICORN on YouTube. Have a nice day, everyone. Ciao.
Bye.
All right. Now we're going to end this live stream. Love you guys. All right. How do I end?